Hello dear traders, let us review what events drove the global markets in the past week. Last week, US stocks edged lower together with US dollar index on weak economic data which were mainly negative. On Monday, single-family new home sales unexpectedly fell by 1.5% in March in US instead of an expected increase of 1.6%. The February reading was revised down from 2% to minus 0.4%. So the US new home sales are falling for the third month in a row, which looks strange amid extremely low interest rates and the lowest unemployment since 1973. On Tuesday, durable goods orders rose in March by 0.8%, which is just half of the expected increase. At the same time, the consumer confidence index for April was below expectations. So far, 168 companies from S&P 500 index reported their earnings. Market participants expect the total earnings of S&P 500 companies to contract by 7.1% in first quarter. On Wednesday, the April Fed meeting took place, which resulted in several public statements that market participants regarded as dovish. This means the US regulator will not only refrain from the rate hikes, but even may cut them if needed to stimulate the national economy. The US stock market indices edged slightly up while dollar weakened. Stocks rose on weak data from Apple, which reported the lowered quarterly earnings for the first time in 13 years, which pushed its stocks 6% lower. On Thursday, weak US GDP data were released for first quarter. Its growth was the lowest in 2 years, being at 0.5%. which pushed the stock market indices much lower. The US currency found negative in stronger yen after the Bank of Japan introduced no additional monetary easing at its latest meeting. Investors expected the bank to cut the rates or expand monetary easing volumes. On Friday, weak performance of stock and US dollar index continued. Personal spending for March, Chicago PMI for April, and Consumer Confidence Index by Michigan University fell short of expectations. As a result, the weekly fall of Dow, S&P 500, and Nasdaq indices was the record in 3 months and a bit below 3%. Apple stocks tumbled almost 12%, in which was their record weekly fall since January 2013. This week, the main economic data will be released in US on Friday, the non-farm payrolls and unemployment for April. The tentative outlook is neutral. We believe the labor market data are so much more important as they remain strong while other US economic indicators have grown weaker. On Wednesday, the trade balance data, labor productivity, factory orders, and some other less important indicators will be released, including the ADP labor market report. On Monday, the consensus forecast of lower total earnings of S&P 500 components in first quarter was revised up from minus 7.1% to minus 5.9%. This may partially support stocks before the new wave of quarterly earnings reports. This was all for the part week. Happy trading. See you next week.